All right, let's get started. So you should all be able to see my screen, and today we are talking about using structure relations to manage your financial transactions. So our agenda looks like this. We'll have introductions and some housekeeping items. We'll give a quick Intellias overview. We'll talk about the what, the why, and the how of structure relations. We'll have a session for questions, and then we will conclude the session. So my name is Debbie Sherman. I am an FSM solution architect here with Intellias, and joining me today is Mike Beyer, who is an FSM principal consultant at Intellias. We ask that you put your questions in the chat, and we will review those at the end of the webinar. We will also be recording this webinar and sharing it via email after the presentation, and you can always find us on YouTube and LinkedIn. So about Intellias. So we are headquartered in Dallas, Texas. We were established in 1999, and we are an Infor Alliance partner, Cloud Suite specialized. We offer consulting services in Infor Loss and Technical Services, Infor Loss and Application Consulting, Infor Cloud Services, and Infor Cloud Suite Consulting. We also offer other software offerings that are utilized for increased productivity and efficiencies. All right, so let's get started on our topic. The what, the why, and the how of structure relations. So we're going to talk about what structure relations are, why we use structure relations and how they can be helpful to your organization, and how they're created and what the impact is on your daily activities within FSM.
Excuse me, Miss Debbie, did you mean
Yes.
to change slide?
Oh yeah, that would be nice, wouldn't it? I'm so sorry. I apologize. I'm reading off of something else. Here we go. All right. All right. So what are structure relations? So structure relations setup is optional, but it can be used and helpful in creating relations between the dimensions within your finance enterprise group structure. So when you create these relations, you define validation rules for each of those relationships that you create, right? So all of you should be fairly familiar with the concept of the finance enterprise group, or what we call an FEG. And this is a pretty simple one that's been set up with the basic finance dimensions. You've got company or entity, cost center or department, a location or a site, account, project, category, intercompany, et cetera. And this one actually even has a funding source if you're utilizing grants. All right, so here's what it looks like when you create those relations. And we'll get into a little more detail on creating these, but once they've been created, this is pretty much what it looks like. Now, the ledger to accounting entity or company is created straight out of the box. Whether you have structure relations active or not, that is something the system does to create that relationship between your core ledger, your closed ledger, et cetera, to your accounting entity or your company. Now, these other ones are accounting entity to site. So that could be your company to the location, facility, site, whichever you prefer to call it. That location to a cost center to accounts, accounts to projects, and projects to project category. So what this does is it limits the use of certain dimensions with others. So for example, we have here cost center to account. That would be balance sheet departments to balance sheet accounts. So we would limit the use of which balance sheet departments require balance sheet accounts. And many times when we're working on daily, this alleviates the entry of transactions to the wrong accounts, right? We can also do specific groupings of projects within the project hierarchy with specific capital accounts, such as fixed assets or work in progress. And what that means is that within your project hierarchy, if you have a set of projects, you can say these projects require or can only use specific capital accounts. That way you're ensuring that the combination of those dimensions within your transactional activity is almost always accurate. The same can apply to companies or entities, to department and cost centers. So why do we use these? We use them to limit the relations between specific dimensions within the FEG, just like I just said, okay? We're limiting what can be used. So we want to make sure a balance sheet department only uses a balance sheet account, right? We don't generally use expense accounts with a balance sheet department or cost center. It reduces the number of journal entries your staff will have to make at the end of each month, reclassing incorrectly coded transactions. It ensures transactions get posted correctly and are reflecting properly on your financial statements. So let's talk a little bit about everyday things that happen. So for instance, department and cost centers may not exist across all of your sites, facilities, or locations. You may only have a finance department at the corporate level, and your other locations or sites do not have that finance department. So you could limit the use of the finance department on transactional activity by linking it to only those companies that utilize it, right? Another good example, if you're in healthcare, would be nursing. Corporate, while they may distribute to nursing, would never actually use a corporate entity and put in a finance code block or your GL distribution to a nursing department, right? It should be associated with the appropriate entity that utilizes a nursing department. So again, what this does is it helps to ensure that you're capturing costs correctly, and there's not costs where they're not allowed and where they should not be. So it's a great tool to utilize for that. So let's talk about how structure relations are created and what effect they have on your daily activities. So structure relations are created within the finance enterprise group. And again, I'm showing this screen. So when you're creating your accounts, your charts, you also have a section there for structure relations. And you create those basic finance structure relations, right? Ledger to account, accounting entity to site, site to cost center, etc. They are activated and they tell you what they relate to. So you have from ledger to accounting entity. Again, this is created by the system and everyone has it, and it is always active. The remainder of these are user-defined relations that you create depending on what you wish to use within your system. So there are some restrictions to setting up structure relations. I'm going to flip back here to this screen. So in your FEG, you have an order here, right? And so that order is how transactional information is entered in the system. So if you enter a journal entry or you're entering an AP invoice, the first thing that's entered is the company. The second may be the department or location, then account, then project category, funding source, and intercompany, if you're utilizing those, right? That's the order. So on the screens, that's what you're typing in order when you enter a transaction. All right, so let's go back here. So as you can see here, I have this order. I have company, location, cost center, account, project, and project category. I kept it pretty simple, but you can go from company to location, location to cost center to account, account to project, and project to project category. You can also skip and go company to cost center. And that's where I was talking about finance. Your corporate entity utilizes a finance department, but you may not have that same finance department in a location. So you can also skip to the next. But what you cannot do is go from the bottom to the top. So company, a relationship between company can be created with anything below it. A relationship to location can be created for anything below it. What you cannot do is create project category to location. It must be the other way around. Location to one of the dimensions below it. Okay, so the order of your dimensions really play a part in how you create these relations. Now, in many cases, when you have created your dimensional hierarchies within the system, so you have a roll up of your departments, you have your chart of account, which rolls up to assets and liabilities, and then your summaries within each of those. Depending on how you have created those hierarchies within the system, that will support the relationship that you create for structured relations, because you can group them. So if we go back to the example of project to project category, you may have projects that are capital, You may have projects that relate to grant or funding sources. You may have projects that relate to foundations, and you may have projects that are other or operational projects. A good example of an operational project is an audit or a gala, and you may want to track the expenses specific to that project. So if you have set up, and I have an example here utilizing IT. If your project hierarchy includes a summary for IT projects, you can create a relationship between your IT department dimension and the IT summary projects to ensure that no other department utilizes the IT projects. So as you can see, it restricts what can be used. And again, that is very helpful when entering transactions and limiting folks to what they can see. Okay. All right. So once you have determined which relations you'll create, then you create rules for those relations, right? So here's the finance structure relation that we looked at back on the other screen. We've got cost center to account or department to account, and you create the rule. It's activated, or you create the relation, I apologize, and it's active. And then the next step is to create that rule. So over here, we have cost center relating to account. We say what that rule is, and we're creating balance sheet. So that's what we're calling the rule. You can name the rule whatever you like. It should probably make sense to what you're doing, but we have balance sheet here. All right, and it's from cost center 90,000 because that is our balance sheet department for this example. And it's going to relate to the balance sheet account group. And again, this is going to be defined by how your chart of accounts is set up, and I'll show you that in a minute. All right. So this rule, again, can be done by value or by group. All right. This is an example. This example is a rule for balance sheet cost center to account, right? And this rule will only allow the use of balance sheet accounts to a balance sheet cost center. Again, the rule can be created by a value or a group, but values are one-to-one, and groups are use more of a grouping of data. So in this example for the value, we've got, again, cost center 90,000. That's our balance sheet. And we've said relates to account 100,001. That's one of the balance sheet accounts. So if you do it by value, you must create a rule for every single account that relates to your balance sheet cost center. So that can be useful in some cases, but more than likely what you will be doing is by group over here. And what that does is, again, we're saying the cost center group is 90,000. That's my balance sheet department. And I want to relate that to all balance sheet accounts. So in order to do that, we create a custom group, and they're actually very simple to create, especially once you become very familiar with them, right? So by group, we're saying, okay, here again, that group consists of a set of data. So that group is all balance sheet accounts. Again, in this instance, we have our cost center set as finance dimension 3, and you all are probably familiar with that. Well, there are out of the box project account. When you utilize the user-defined finance dimensions, they're finance dimension 1, 2, 3, 4, etc. So we've identified that our balance sheet department, or our departments, are labeled as finance dimension 1. So we have that cost center group for 90,000. And what that equals here on this side, we create that custom group, and it's finance dimension 3 equals 90,000. And that's the condition you create to create that rule for the from cost center piece of this. That is the only cost center that will be allowed for this specific rule. So then we want to know, what are we going to relate that to? We are going to relate that to the balance sheet accounts. So we did the cost center from cost center relating to account, and the custom group we're going to create for this is the balance sheet. Okay, so again, in this example, the balance sheet accounts are used with the balance sheet cost center. So we have to create the condition for this rule. And the condition is that only accounts in the balance sheet section of the chart of accounts can be used with a balance sheet cost center. And in this particular custom group, we say chart section dot balance sheet. End of story. We are relating this to the business class general ledger chart account to the chart section dot balance sheet. And if you've done any type of reporting or you utilize ISD a lot, you're probably pretty familiar with the business classes, right? Because you're doing queries, you're uploading, etc. So this is nothing more than identifying which field within that business class are we going to utilize. Okay. All right. So you've decided what relations you need. You've set up those relations and the rules associated with them. And now you have to create valid pairs. So valid pairs are exactly that. They're based on the rule you created. And what they are in this instance, an example that we've used, is a balance sheet cost center can only be used with a balance sheet account. So the system is going to create a valid pair for each of those relationships between the dimensions. So once you've created your rule, the next step in that process is to generate your validation pairs using the rules that you've created. Notice here, we have cost center to account as our relation. We have our relation rule defined as balance sheet, and that's where we went in and said, balance sheet department 90,000 can be used with any of the balance sheet accounts within our chart, right? Okay, so once you hit this generate validation pairs using rules, a valid pair is created for each valid relationship between the dimensions. So the system is actually going to go in and it's going to say, okay, the cost center is 90,000. That's what I have. And now what account? It's going to list out every account that can be used with that. And you notice the pairs, 90,000 to 10,000, 90,000 to 10,001, 10,002, and so on. It's going to list every one of the accounts. So what does this mean? Why does it need to do this? Well, because again, when you enter a transaction within the system, so I'm going to sit here and enter a journal entry, and I'm going to put in my company 100. I'm going to put in my location 1001. I'm going to type in my department, which is 90,000. That is a balance sheet. And then if I go in and put in account 10,000, 10,001, or 10,002, I put in a dollar amount, I hit save. It allows that transaction because what I've entered is within this rule I created. I'm utilizing 90,000 with 10,001. Should I go in and enter that same journal entry and I put in company 100 and I add my location 1001 and I put in department 90,000, my balance sheet, and I try to enter an expense account, it's going to tell me the relationship does not exist and will not allow me to move on. So that's what we're talking about in allowing in creating these and letting these rules help you. So it won't allow the mismatch of certain dimensions with others. And in this specific instance, the balance sheet department with expense accounts or liability accounts or what have you. So that's the purpose of utilizing these. Okay, if what gets entered within the system at the transactional level does not match up to these valid pairs, it will not allow you to create that transaction. So the person has to go back and figure out what they've done wrong until they can get it right. Okay. All right. So here's a really good tip. Within your FEG, within the options under the general section, you can check a box that says use finance structure relation detail for select. Well, what does this mean? What does this do for us? This is a great tool for your users, for those people entering journal entries, your staff accountants, for people entering receivables invoices, AP invoices, etc. When they go in to enter transactions, if you have this box checked and you have structure relations set up, when the user selects from the drop downs for the dimensions at the transactional level, it will only show valid transactions. So for instance, let's go back to that journal entry that I was talking about. I enter my company, I enter my location, and I enter my department of 90,000. Because I have the rule set up that only certain accounts can be used with that department, if I select the drop down on the department, it will only show the accounts that I can use for that specific department. So that's a really cool tip, and it's very helpful. It allows you to see across the board from every dimension what combinations can be used. All right, so if you've got structure relations set up at the company to location level, company to department, location to department, it will show you what's valid as long as you have your structure relation set up and active. All right. All right. So that's what I have for around structure relations. I don't know, Chandra, do we have questions?
I don't see any at this time.
Right. If you have questions, please put them in the chat.
And if you get off the meeting today and have some pop up a little bit later, you can always reach out to us. Deb has got all of our contact information on the screen here.
Yeah. Yeah, listed here are Mike and myself, as well as Chandra. She's our Director of Business Development, and our Senior Director of Services, Allison Hoffman.
Yeah, say Debbie, can I add a couple comments, please?
Go for it.
I just wanted to point out, I don't know if you noticed on the screen when she was setting up the relations, there was this dynamic create option.
Right here.
And what that does is, in this case, balance sheet, cost center to accounts, balance sheet account. If you would add a new balance sheet account in the system, with that dynamic create set to yes, that will automatically create the relation detail for that new account. So you don't have that maintenance. Where if you were doing by value and not doing with the rules, unfortunately, that means that if you add another account, you're going to have to come in and add that value to the detail to make that eligible. So that's another very powerful setting there on that. And then, as you notice, as she was creating the account group, she just went by the chart section dot balance sheet, right? Where when you have your structures for your hierarchies created, summaries can come into play so that you can do a summary of cost centers to these accounts. And it will help your structure, creating your structure relations very, make it a lot easier. So
Yes.
the order of your dimensions, like Debbie talked about, and your hierarchy summaries, thinking about those when it comes to my structure relations is going to make the creating of structure relations that much easier. And then one last thing, a lot of times, right, when you're getting started, you're going to be bringing in history journals, history general ledger transactions. And they might be their history, right? So they're used in the past, and they might not be according to what your structure relations are set up. So that when you do the interface of these balances, so to speak, there's an option on the interface program to bypass structure relations, right? These were done in the past. We know that we didn't have structure relations back then, but we got to get these balances in. So instead of having to turn off structure relations and everything like that, there's options in interface programs to bypass the structure relations. That's another thing that I see used quite a bit. And also on these rules, Debbie showed you one rule. You can have as many rules for that
Yes.
structure relation as you want. I mean, we see people having 30, 40 different rules to capture all their departments, all their cost centers to all their accounts. So you can have as many rules as you want when you do create those. So.
Yep, absolutely. And there are valid reasons for creating for creating rules by value. You may have very specific accounts that you utilize and only utilize for one cost center. So there are instances where this can be very helpful. So, you know, but for the purposes of this, when you're limiting a department to a full section of the chart, it's much easier to create it by group than it is by individual value. We have created structure relation rules that are very simple, much like what we said here today. These are the standard that are created. And it also allows for when you do certain sites to cost centers, you're not restricted to just these. It also allows things outside of the rule as well, as long as it's not affecting any of the dimensions within that rule. But we've done some pretty complicated ones for different types of industries as well. So great tool to utilize, fantastic. Even if you only set it up at the top level to, do the basic things, like we said, balance sheet, cost center to balance sheet account, certain projects to project categories, or projects to accounts. We almost always see our clients do the projects to, the capital projects can only use a fixed asset account or work in progress account, or, a fixed asset clearing account. So even just those basic ones can help considerably, especially when you're trying to track and set up assets in the system or track projects. So. All right, I still don't see any questions. So again.
Nope, we haven't had anything come through. Great session, Debbie. This is really good information to have. Thank you.
You're welcome. And again, if you have any questions, please feel free to reach out to us. We're happy to help in any way that we can. And they will be making this available and sending it out via email. So thank you all very much for joining us today. We appreciate it. Happy holidays to all of you and have a wonderful rest of your week. Thank you.